Welcome to TradeTheMBA.com. This is John. This report is for the 5th of June. Not much of a surprise for Monday. We talked about fund money coming in, meaning from institutional setups, all the money from people contributing to their pension plan, so to speak. And, as the economy improves, that number becomes much larger, particularly as payrolls increase. So, decent pop right back to the 100% mark. Perfect there, which very consistent with the rising gold, particularly above the 50% line, and certainly corresponds exactly with what we were seeing from the DOC reading. So we're in line with that. The shakeout moving close to the 0 point. We really don't see anything. We didn't get a reset of this deal, so we know this isn't going to last very long. The question really will become, do we get the breakdown here and what would be considered bearish spider? The last one was like right over here. It didn't lead to a whole lot. We just got a dip to the 50%, but that is much more significant now until 50% Fibonacci here starts to rise. We've had a declining 100%, which has really just led to where we're at right now. Not much of an increase, but just the falling 100%. Now, NASDAQ, though, is way outperforming. And you can see that's clearly from the shakeout standpoint, as well as cyan under red, all the things that you look for a real positive move. And you've got a much more significant bounce out of the NASDAQ than you have out of the ES, the broader market. As we talked about before, Euro stabilizing down at this lower, still above the key target range, and my key target range would be slightly below that. But again, like I said, it's got to pass that 23 in order for this to be a significant run, even with this dip below the orange net. And we can see that it's already got a couple of yellow developing inside of the 23 that rarely breaks out, and if it does, it's not likely to last long. The blowout from TLT fading quickly, would expect that to continue to drop pretty rapid, particularly if those growth numbers coming out of the Atlanta Fed and that are even remotely close. This is got to drop dramatically. The question then will become, is the Fed going to be counter to productivity, or is it going to let it slide for a little bit longer? You had one quarter, first quarter weak growth, and then you start to get some growth into another quarter. Can you really be attacking rates at that particular point with that kind of uncertainty? And they've been very aggressive up to late, so we'll see if that continues. Oil pulling back into the normalized range here. It still hasn't caused any real impact. This was the buildup to summer gas prices. This will be the slight letdown into fall. Not going to have much of an impact, but certainly it's at a reasonable level to where, with the modest wage gains and things like that, you're not building inflationary pressures, which is why you're really not seeing gold do anything at this particular time, though it's still in a pretty decent range. So here was the day's range. It's pretty straightforward. We had those giant moves with the positive extremes, which means those still, in some cases, need to be filled back in right around the 36 range. We've gotten a partial fill on the rest of them from the second half here as we came to 50% and produced a lot of these little green dots here. Even when the dips below the red above the 50%, when you get reasonable buy configurations from that, they tend to still climb. Now, the problem with this whole configuration was we never got the orange below red, and so the little pop kind of faded back, even with the gold developing right in the middle of the range there. It wasn't until we ended up with the orange dipping below did we get to push back to the 100%. And all we've done now is just faded right back into it once DOC spread started. And that was, right about here. So we were looking at the 46 range. But there's not a whole lot of range to the 50% when you're looking at a 10. In fact, we've dropped to 9 now from the Fibonacci. So that squeezing is going to need to lead to a blowout direction. The question will be just wait and see which side we get to. Fairly oversold in this particular setup right now, but you don't have orange or anything, so we're still in a continuation of this weak flatness as it runs into the pre-market. So we'll see if that changes out a little bit, and if there's some catalyst that's going to start to move the market. Now that May is over and you sell in May and go away, I don't know that that's necessarily going to apply. There's plenty of other dynamics out there that can certainly create some significant movement during the summertime. So we'll see how active things get. As always, though, trade well, and we will talk on Skype chat as needed.